Something important has just gone unnoticed, but fear not, we still have time to take advantage of it. However, this will be the last one. But for many investors, this might provide a huge risk worth millions of dollars. What am I talking about, though? Okay, let's investigate. Welcome to Dr. Crypto, your daily serving of Shiba. This is the spot for you if you're curious about anything related to Shiba. If you want to keep informed about all the latest news forecasts and stay ahead of the curve in the crypto industry, subscribe. To get more Shib news, be sure to click the like button. The world of cryptocurrencies was quite the roller coaster yesterday. Panic swept across the market after an astounding revelation. In a single morning, leveraged trades worth close to $300 million were liquidated. Give it some time to register. $300 million vanished in an instant. It serves as a reminder of how unstable this industry can be. Therefore, everyone must exercise caution in the near run, since the recent Bitcoin halving event has added petrol to the fire. Variations in the market are not only possible, they are almost a given. But wait, yesterday's events didn't end there. It may surprise you to learn that something far more important happened. An event occurred inside the Shiba Inu ecosystem that first seemed to be of little consequence. It's surprising that Shiba Inu influencers missed the announcement yesterday. Positive news doesn't go overlooked too often. But because of one important aspect that no one noticed, this news is much more important than everyone first thought. It's similar to ignoring a little ding on your automobile and then realizing later that it's an indication of a bigger issue below. What's going on then? SBI VC Trade, SBI Japan's cryptocurrency branch, has, however, unveiled a new possibility that, despite its seeming lack of excitement, is really rather intriguing. A new service has been introduced that allows you to use Shiba Inu and a few other cryptocurrencies to generate passive income. SBI announced this news on their official X account and provided details on their blog. Thus, it came direct from the source. Shiba Inu, Bitcoin, and Bitcoin Cash holders may access what they refer to as the rent coin lending service. This is the situation. If you have cryptocurrency assets that you don't intend to sell anytime soon, you may rent them out and be paid throughout the loan term. Emphasized that the purpose of this is for those who want to supplement their income without selling their cryptocurrency. This would be analogous to having a beloved book collection that you don't always read. While keeping your collection secure at home, you may earn some money by lending them to someone else who wants to read them. This is essentially the way that the library industry was first founded. Surprisingly, over 75% of Shiba Inu token owners have no intention of selling their tokens anytime soon. That is a sizable population that might be drawn to this chance. When you consider it, this revelation is really very amazing. The fact that a bank is providing this chance, however, is what makes it more intriguing. Yes, you heard correctly. You may be wondering, but wait, don't banks generally detest cryptocurrency? You would also be correct. It's common knowledge that a large number of banks don't really like cryptocurrencies. Not just tiny banks, but some of the larger ones are also not too fond of it. In case you're still unclear about what I mean, here's a quick summary from a Twitter user that clarifies the primary problem with banks. Outlined in layman's words, they presented anecdotal evidence of how banks who are purportedly pro-crypto might freeze accounts due to cryptocurrency transactions. For example, there has been a spike in blocked or restricted accounts of cryptocurrency specialists in the UK. Remarkably, this even applies to institutions that are well known for being crypto-friendly, such as Revolut. The user describes how using the Revolut app to move Ethereum to their personal wallet resulted in fees and account freezes. This instance underscores the delicate line banks must tread between regulatory compliance and customer experience, and it raises questions about individuals' power over their own assets. Long-term clients with digital assets are also having their accounts closed by conventional banks in the US, raising concerns about transparency and intentions. Although the UK's regulatory strategy, which includes positive friction, tries to improve consumer protection, it may cause cryptocurrency investment procedures to lag. The conflict between established financial institutions and the expanding cryptocurrency sector is highlighted by this story. One user nailed it when they expressed their displeasure with banks suspending cryptocurrency accounts and demanded more transparency and customer control over money. A lot of people in the cryptocurrency world agree with this. This is definitely a nice statement. It encourages equity and responsibility in banking operations and is consistent with the concepts of financial liberty and consumer empowerment. Users should be able to see and control their own assets with clarity, without hindrance or manipulation from other parties. On the downside, meanwhile, banks' persistent blocking of cryptocurrency accounts raises moral questions about the legitimacy and impartiality of financial institutions. It draws attention to concerns of prejudice against those who are involved in legal and acceptable activities in the cryptocurrency realm. Such behaviors have the potential to undermine consumer trust in established financial institutions and sustain sentiments of unfairness or marginalization among cryptocurrency fans. This is when the intriguing part really begins. Consider big banks like JP Morgan, whose CEO Jamie Dimon is well known for being against cryptocurrencies and has even called for their outlawing. But well, what do you know? The news that Dimon is a registered participant in the Bitcoin spot ETF has surfaced, which is significant in the cryptocurrency space. When this information originally surfaced, it generated some heated debates. It's a bit of a puzzle, don't you think? Banks seem to detest cryptocurrency on the one hand because it allows users excessive freedom. However, they have no problem making money off of it themselves. This seems unethical when considering ethics. It's similar to acting one way and speaking another. All clients should be treated fairly by banks, regardless of their investments or personal interests, and they should be treated consistently by them. Consumers and the larger cryptocurrency community suffer in the end when the financial system's integrity and confidence are compromised by this sort of double standard. Thus, when SBI Bank keeps launching new cryptocurrency services, like this one that combines loans with Shiba Inu, an intriguing thing happens. Though they haven't publicly disparaged cryptocurrency, individuals are beginning to divide into two groups. There are many who think that ultimately all banks will adopt cryptocurrency entirely. The opposing side, however, views it as a Trojan horse, some kind of threat that is concealed, like a masquerade. They believe that individuals should exercise caution and be alert to any hidden dangers. It's unknown at this time how long banks will keep launching new cryptocurrency services before maybe retreating. But the price and acceptance of cryptocurrencies will probably continue to rise as long as they do. Let's go back to the prior discussion of the circumstance when over $300 million was liquidated in a matter of hours. A similar situation is playing out with Shiba Inus nowadays. Analysts are cautioning that if anything goes wrong, traders of Shiba Inus might lose up to $1 million. What am I talking about, though? This week, the price of Shiba Inu has remained stable above the 402 threshold, even though the whole cryptocurrency market has seen a substantial decline. The drop in value, which amounted to more than $50 billion, has been ascribed to investors' anxieties and uncertainties caused by the growing news from the Middle East. But despite all of this chaos, Shiba Inus have shown to be resilient, preventing a significant reversal. Investor behavior is one reason that has contributed to Shiba Inu's resiliency. According to on-chain statistics, investors have chosen to cling to their Shiba Inu coins instead of giving in to doubt, anxiety, and dread associated with the market. Rather of caving into the choppy market circumstances, they are setting themselves up for possible returns down the road. Analyzing the flow of Shiba Inu coins across exchanges offers further perspective on investor attitude. About $9 million worth of Shiba Inu tokens have been removed from exchange-hosted wallets and placed in cold storage within the last 7 days. Shiba Inu has benefited from the removal of tokens from easily traded markets, which has lessened the general selling pressure on exchanges. Shiba Inu's capacity to keep prices the same. Furthermore, examining liquidation maps provides insight into how leveraged traders are feeling about the market right now. The data shows a significant change in favor of bullish sentiment, with a greater proportion of long holdings than short ones. Practically speaking, this means that most derivative traders are placing bets on a near-term rise in the price of Shiba Inu. With these things taken into account, the future seems bright for Shiba Inus. Furthermore, as previously shown, short sellers of Shiba Inu run the danger of losing more than $1 million in possible liquidations in the event that prices rise by a further 10%. With the bulls holding such a large portion of the market, it seems more probable than not that the price of Shiba Inus will rise to 20% gains. People should use extreme caution since they might lose more than $1 million in liquidations. However, what are your thoughts about that? Please leave a comment below. I look forward to reading your thoughts. The date is over now. Remember to give it a big thumbs up. To see our most recent material, share it and subscribe to the channel.